Are you making mistakes when you're investing for passive income using covered calls? I know I've made plenty of mistakes in my life, and a lot of people in my program have made those mistakes too, but we learn from them. Here are 6 of the biggest mistakes that I've seen. Biggest one is not having a trading plan. The people in my program, they always ask me questions, because I do some mentorship, and they say, well, I want to try this, or what do you think about that? And I'm like, the first question I always ask them is, well, what's your trading plan? And most people, especially people that are not in my program, do not have any kind of a trading plan. They don't know what to do when the market goes down, what to do when the stock goes down, what to do when things go against them, when to roll their trades, and all that kind of stuff. You got to have a plan, because emotions are the enemy of the trader. And I would say when emotions go up, intelligence goes down, and vice versa, because I make lousy decisions when I'm emotional. So you've got to have a trading plan. Mistake number 2 is doing covered calls on downtrending stocks. Now, a lot of this is going to depend on your approach. If you have an approach that says, look, I don't care, I like Apple forever, and I'm going to trade Apple forever, even if it goes down, I'm going to sell calls against it, even if it goes up, well, that's one thing. But if you're like one of these people that gets online and you just watch a quick video on covered calls and you don't have a system, like you don't know what to do when it goes against you, well, then this is a lousy way to do investing, because let's say, for example, you're in a stock that's, let's say, $200, and you get $3 for the call of time premium, right? And so let's say you're selling out of the money, you get $3 worth of time premium, but the stock goes down $6. Well, that's okay. You're still down $3 now, right? So you say, well, I'll do it again. I'll get another $3. And then the stock goes down another $6, because stocks tend to move in momentum patterns, right? So now the stock is down $6 times 2, which is $12, but you've only gotten 6 back. Well, now you're down $6 total dollars. Wow, if it keeps going down, and trust me, I've been involved in stocks that keep going down, you've got to have the tenacity and the wherewithal to hang in there and keep selling calls. And then what happens if it pops above your strike price? What's your trading plan? Back to rule number 1. So doing something on a downtrending stock when it comes to covered calls makes things a little bit more difficult. Not if you have a long-term time horizon and you have strategies on what happens when the stock pops back up, but generally you'd rather start out when the thing is green rather than fighting a red market, a red downtrending stock. So that's number 2. Number 3 is getting involved in stocks with poor fundamentals. I have a friend of mine who a few years back was really big on these pot stocks. Like, he was the pot stock investor. And he calls me and he goes, hey, what do you think? And first question I said, well, is what's your trading plan, right? But then I said, well, why are you involved in these pot stocks? None of them make any money, and they're run by potheads, right? There's no problem with being in a pot stock, but watch out who your management team is. And watch out the fundamentals of the company. So having poor fundamentals on a stock is a killer when it comes to investing in covered calls, because what happens is you buy a stock and it just keeps going down because it's got no fundamentals to hold it up. If they're losing money every quarter, every year, or if they're selling less, like their revenues are lower every quarter, every year, like that's going to be a downtrending stock. And you got to have a lot of tenacity, like I said before, to be able to hang into that downtrending stock when you have poor fundamentals. So choose stocks with good fundamentals. You want stocks that are trending up. They have good growing sales, good growing earnings per share. They have a good return on equity. They have a really good management team. They have great products. You want to be in this stock. I like super stocks. You know what the super stocks are. Apple, Microsoft, Nvidia now, Tesla is a super stock. Dell from back in the 90s, and Ford from back in the 1930s and 40s, and GM back in the 40s. These are super stocks that just keep going up and they don't seem to stop ever if you look at their chart. So those are stocks that have good fundamentals, and those are the ones you want to be in, because those are the ones the institutions are in. Mistake number 4.
Hey, it's Mark Yegi here to tell you about our cash flow machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for 2 to 4% a month of income and growth in your portfolio. And we have courses to teach you how to do this yourself or inside a mastermind community. And the best part of that is it only takes about 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA from $111,000 to over $500,000 in just 19 months without huge risk. I'm not telling you this to brag, just to show you that you can do this too. So to learn more about this program, go to cashflowmachine.io. That's cashflowmachine.io. cashflowmachine.io, and you can learn more.
Is doing it when the market is dropping. So when the whole market is dropping and you're in a stock, well, your stock is going to be dropping because 70% of a stock's performance comes from the direction of the market, because it's a stock market, a market of stocks. And so if the stock market is going down, chances are your stock is going down too. Well, that's not the end of the world, but I recommend you use some kind of system for market timing. We have a system inside of our program that we teach you, and it works about 75 or 80% of the time, not 100% of the time. Nothing's 100% in the stock market, but you've got to get some market timing in your favor, so you know when to push the accelerator when things are favorable, and you know when to kind of slow down when the market is not favorable. The next one is not repairing your trade. So number 5 is not repairing your trades. Why would you not repair your trade? You've got a stock going down. Your option is probably going down on it too, which means you could buy it back at a lower price. That's awesome. Why would you not go out there and sell another call to pick up a little bit more cushion on the way down? That's a kind of a repair of your trade. So there's lots of different ways to do trade adjustments, trade repairs, risk management. You need to learn about some of those methods. So that's the 5th mistake. And the last one, this is the one that I see all the time and it cracks me up, is that people try to be Nostradamus, right? You try to predict where the stock is going. I don't know how many times I've heard, well, the stock is going to bounce off its 50-day moving average, or the stock's going to break through the $200 level and go to $300. Yeah, but how do you know? Like, if you're so smart, then how come all the people that have billions of dollars on Wall Street don't already know that and the stock isn't already there? It's because it's a market. We don't know. So what we have to do is we sell covered calls for passive income, because we're not always going to know whether the stock is going up, down, or sideways. We just don't. As much as we think we study charts and as much as we think we know, we can get probabilities on our side, but we just don't know. So don't try to be Nostradamus. So those are the 6 biggest killer mistakes that you can make in your portfolio that I've seen many people make. And by the way, if you like what we're doing here, like and subscribe and all that kind of stuff on this channel. I'd really appreciate it. If you have a comment, please, I love comments. It's kind of like it juices me up when I see a cool comment. And even if you think there's something that I could do better, please make a constructive comment in the comment section. So listen, thanks for being here. Now you have the 6 covered call mistakes to not make when you're doing your covered calls. If you want to learn how to make $5,000 a month, check out this video and I'll see you there. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.